I want to talk about Indonesia, as you suggested, then where it sits in this particular situation in markets. I mean, as I said at the start, it feels to me very different context from 20 years ago. Although the currency is almost as low as when I was here then. But of course, there's some of the same question marks coming up. I think what investors have seen, though, and maybe the fact that it's taken so long for this pressure to come, is that people can see that you have the floating currency, you have better domestic policies, you have a smaller current account deficit, all these things that make you less vulnerable. But is there anything that particularly worries you about the pattern, the change in investment sentiment that you've seen in the last few months compared to 2015? Or do you feel like it really is pretty much the same? It's kind of the taper tantrum again.
I think it is a continuation of the normalization path that we've been on arguably since 2013, right? So 2013 was the beginning of the Federal Reserve's monetary renormalization, right? That's when Federal Chairman Bernanke first floated the reality that at some point quantitative easing had to stop and then eventually reverse. And that triggered the famous taper tantrum in 2013. We then saw another earthquake in 2015, and we're currently experiencing another earthquake in 2018. So I think we should expect this kind of turbulence, every 2 or 3 years. I think as the markets and corporate sectors and economies adjust. So yes, there's some features which are new. Back in 2013 and back in 2015, we did not yet have the trade wars, so that's new. Back in 2013, back in 2015, you did not yet have the China Belt and Road Initiative, right? Which at the moment, very noticeably, a number of countries are struggling with. Most prominently, Sri Lanka, Pakistan, but even Malaysia very prominently had to suspend or restructure something like $22 billion worth of Belt and Road projects, right? So those are the things which I think are new challenges, but at the same time, probably new opportunities for us to deal with.
I mean, if you look, you'll see, my colleagues are keen to show off the terminal, the Bloomberg terminal as well, but we've got a couple of charts just talking about the impact on Indonesian assets of the sell-off in the last few months. And particularly we've seen it on the stock market and we've seen it on the currency. So if you see the stock market, we've seen, obviously you're familiar with the trajectory of the stock exchange, but I think obviously the contrast with 20 years ago is that you've also got the rupiah is also able to take the pressure before it reaches a real crunching point. But one of the things I think that has made you a bit more vulnerable is the very high proportion of foreign ownership of government bonds. Is that something now that you feel, maybe we shouldn't have been quite so successful in attracting the foreign investment to that?
Frankly, fixing our structural dependency on import of capital is something that will take a long time, right? It can be traced directly to the reality that something like only 30 or 40% of all Indonesian adults actually have a bank account. So we don't have enough domestic capital formation. We don't have enough financial inclusion and domestic savings to supply the capital that we need for investment in infrastructure, industry, and so on. And so the remainder we are forced to import, right? Now, that's why financial inclusion is so important. Extending banking services to the unbanked, that all brings the informal sector of the economy into the formal sector, right? And that's how domestic capital is generated, and that's how you reduce your dependency on having to import capital. But that's going to take time. Now, technology might be able to help us leapfrog, much like 30 years ago, Indonesia and developing countries went from no telephones straight to mobile phones, right? Bypassing decades of landline build out. We might be able to go from no bank accounts straight to mobile banking. People in the villages, people in the slums, people everywhere, no longer going to a branch to try to open bank accounts, but maybe doing it on their mobile phones, right? But look, in the meantime, I think international participation in our capital markets and in our capital flows is a huge positive. If anything, what I regret is our failure to create more supply, right? To have more IPOs, to list more bonds, right? To do more asset securitizations. Because I think the demand is there, the appetite is there.
Well, it was there a few months ago. I'm not sure.
Well, again, I think these things go in cycles. I'm quite sure that similar to what we saw in 2015, 6 months from now, we'll be sitting here and things will have recovered. But with the same certainty, I predict that we'll be sitting here in 2020 or 2021, and there'll be another earthquake, right? But these are all volatilities along a long-term trajectory that is fundamentally still positive.
I mean, one of the things that you do want to see, and I think we probably are seeing, is just investors being more discriminating and actually rewarding the countries for better policies. So I've got a team of, we have 100 economic reporters around the world, but I've also got under me 25 economists who are doing research. And they have a vulnerability, they've done a scorecard for a lot of emerging market economies on various measures that you might look at for, and this is actually it. You'll be glad to know Indonesia is only really in the middle of the pack. It's a little bit red, still flashing red on some things, particularly on the reliance on foreign lending. But there is a recognition that the quality of government policy is high and that the current account deficit is much lower than it was in the past. Do you think that investors are sufficiently discriminating, or do we still have that dynamic that once Argentina and Turkey, if something bad happens there, you're going to be hit as well?
Stephanie, my observation is that as interest rates around the world headed towards zero, all the markets started to move in tandem. So correlations disappeared, and either all the stock markets go up together or all the stock markets go down together, right? But as interest rates headed towards zero, discrimination disappeared, right? Everything became correlated, and everything went up together or went down together. My prediction is as interest rates go back up again, you're going to start to see the return of differentiation, right? Higher interest rates have the effect of reimposing discipline, right? Raising the bar, if you will. And that will force people to prioritize. It will force people to say, look, there's a real cost to my capital now. I've got to think a bit more carefully where I park it. Now, the other thing I would say is, I spent my whole life in the private sector before I joined the cabinet 3 years ago. And in the private sector, we always poo-poo the politicians, right? It's like, oh God, politics. And we always, get frustrated with policymakers.
Were they appalled when you went into the cabinet with your colleagues?
But now I realize the power of policy. And I also realize that policy is rooted in politics, right? The vulnerability chart is a direct consequence of coherent or incoherent policy, right? And it's a constant struggle to make policy coherent, but frankly, healthy politics helps hugely with coherent policy, right? I think we've seen negative and positive examples, where toxic politics creates horrendous policy. Conversely, I think, happy to report, personally, I think, and I'd be keen to hear Bogor Mayor Bima Arya, who's from our world of politics, But I personally think that Indonesian politics are getting healthier and better, which will help with more progressive and more coherent policy.
Well, you made a mention of, the other way of putting what you said in your speech was you never let a good crisis go to waste, that it should always be a spur to reform and doing some of those things that are hard. One European official said to me once, politicians never do anything unless they're standing on a window ledge looking over the edge, and then they do the right thing.
That's right.
Are there more? I mean, we saw response a few months ago. We've seen some changes in Indonesia policy in response, sort of in preparation for this moment. Are there other things coming down the track, especially in terms of encouraging foreign private investment?
Absolutely. Look, Stephanie, I was startled a few weeks ago when our economy coordinating minister conveyed a few instructions from the president about a few reforms which we had talked about a year ago, which subsequently just got forgotten, shelved. And considering that we're in an election year, I already gave up on them, frankly. And suddenly they're making a comeback. I don't want to preempt my colleagues, my superiors especially.
Just between us, you don't want to know.
But I think I'm looking forward to a few breakthroughs, a few reforms that open up the economy a bit further, frankly, even before the election. And I can assure you that discussions are already taking place in President Jokowi's team about what we would do with the second term. With a second term, there would be no time to waste. You would want to hit the ground running, and I think we're making up a list. There's an amazing number of simple, low-hanging fruit. For example, one thing which is pressuring the exchange rate in India and Indonesia is the fact that we're big oil and fuel importers. So as the price of oil has gone up dramatically, our fuel import bill has ballooned and it's draining our currency reserves, right? Well, frankly, one structural reform would be to move aggressively towards electric cars and electric buses, right? And I religiously follow your Bloomberg New Energy Forum updates on the Bloomberg app. Rather conveniently, we do have an electric car boom now. Amazingly, the city of Shenzhen in China is now 100% electric buses. Yeah. In a speech just 6 months ago, I think, President Jokowi challenged Jakarta Governor Anies to start down the path towards electrifying all of our buses. To cite the famous McKinsey 80-20 rule, just Jakarta is 20% of Indonesia's entire national GDP. If you look at our fuel import bill, say fuel consumption, I bet Jakarta is probably 30% of the entire national import bill. And then if you add the surroundings, right, Greater Jakarta, West Java, Banten, that's probably maybe 50% of our whole national automotive market, public transport market, and fuel bill. So if we targeted that for restructuring, I think it would make a significant dent in our annual fuel import bill and therefore on the current account and the currency.
So you've given us a sort of a tantalizing idea of future reforms that might be there. It sounds like market discipline works. These reforms that were sort of on the back burner are now maybe back on the back. We're here at the World Bank meeting. I mean, the World Bank in particular has been very critical of the negative investment list. And there is a perception and a reality that there are some parts of the economy that are just excluded to foreign investors. Is that something that you see some movement on, briefly?
So that's a perfect example of how, in my personal view, the politics lately have been getting more healthy, right? So after the very tumultuous Jakarta governor election, where unfortunately the issues of race and religion exploded onto the national scene. And sad to say, when race and religion come into the equation that has significant spillover into anti-foreigner sentiment, right? And one of the biggest fears going into next year's elections was a replay of that, right? Again, an election fought on race, religion, with significant anti-foreigner sentiment. And I think, thankfully, the two sets of candidates have successfully put that issue to the side. The opposition, which very successfully prosecuted the Jakarta governor election on race and religion and anti-foreigner sentiment, picked as a vice presidential candidate a young, successful businessman who is very secular and international, right? In fact, I shared this story pretty widely. It was only a couple of weeks ago. I fired up my Bloomberg app, and there was a Bloomberg interview with opposition vice presidential candidate Sandy Uno, and I almost fell off my chair because he sounded exactly like me, right? He was bemoaning the overdominance of our student enterprises. He was lamenting our rigid labor markets, saying that they need to be made more flexible, and he strongly welcomed international investment. And that's coming from the opposition. So again, if there's a bipartisan consensus that international investment is a positive, that whoever wins the election, that's something that's
so you've
got
a job no matter what happens, by the sounds of it.
But yeah, I'm more optimistic now significantly since the policy platforms of the two contesting pairs of presidential and vice presidential candidates has come out.
We're going to run out of time, but you did mention the sort of global environment in a minute, and at the beginning of your remarks, and I didn't want to lose the opportunity to ask you about that. We've talked about toxic politics, and we've talked about the importance of coherent politics. The White House has made an interesting contribution to that debate recently. Do you sense, has it changed the atmosphere around policy making that you do have now, the country that was the sort of flag bearer for multilateral policies, for trade openness, for all these things that you've been nagged to do by the World Bank all these years, the fact that the US has now got a slightly more unusual mix of policies to that, does it make it harder? Does it change the mood of these kind of meetings?
Stephanie, this is probably a very personal bias, but I'm a very big believer in change and in trying new things.
We're definitely trying new things at the moment.
That's right. And look, the multilateralism and the enlightened leadership from Washington and so on has been kind of a constant for 20 or even 30 years. And I'm actually not so averse to trying something different and see what happens.
Protectionism isn't new. I mean, it took quite a long time to get rid of protectionism, but it's not a brand new idea.
Well, with the passage of time, it's human nature that we forget. So I think for some of these things to make a comeback, and why don't we see what happens? I think one criticism I have against ourselves, against the technocrats, is we think we know best, right? But a lot of times I think it's worth it to try something different just for the sake of trying something different. Because there's plenty of things that we've been doing that clearly are not working, right? Otherwise you would not have the kind of backlash from Brexit and rise of populism around the world that we're seeing today.
But it sounds like then you might think that the voters should have a wider choice here in Indonesia rather than having two parties that are saying the same thing.
I think you're going to get a lot of policy experimentation regardless. And in fact, some of the most innovative policies are now coming from cities and from states, right? So if you look at what Mayor Bloomberg did in New York, right? If you look at probably the most progressive policies on energy and transport in the world are coming from the state of California, right? President Jokowi himself rose to the presidency because he was a highly innovative and progressive and reformist mayor of the medium-sized city of Solo, and then governor of Jakarta. So I think you're going to see a lot of policy experimentation, a lot of policy innovation at the city and provincial level, and that will inspire other provinces, other cities to copy and emulate them. But yeah, I think it's an exciting time, and I think we'll try to harness the urgency and the pressures to push for urgent reforms.
Well, finally, just on the dollar, because you just sort of put that out there at the beginning of your comments, you know, and the possible challenges to the dollar's role, a little bit of resentment of the reliance on the dollar. Of course, China, with the Belt and Road Initiative, but also in building up the renminbi, is angling for that kind of position. You know, very briefly, in 20 years, do you think the renminbi is going to be the dominant currency, at least in this region?
I would not say that it's going to be the dominant currency. I think the dollar will still be the dominant currency, and I want to repeat that the problem is not the dominance of the US dollar. The problem is the over-dominance of the US dollar, right? So I think the dollar at 70% of global reserves is unhealthy. The dollar at 55% of global reserves would be very healthy. And I think it's at 10% to 15% space that the renminbi, the euro, the yen, even the pound sterling, and other currencies need to fill. The other thing I like to highlight is everybody's always talking about the benefits to the USA from being the issuer of the reserve currency. Well, we should talk a bit more about the burden placed on the USA from being the issuer of the global reserve currency. Because the rest of the world, all of us, are so lazy. You know, we love the simple convenience of doing everything in dollars, but then we demand that America issues debt, right, borrows, so that we have a attractive yield where to park our dollars, right? You know, debt is always the responsibility and the fault of not only the borrower, but also the lender, right? So there's actually tremendous demand for dollar debt, and I think it's actually keeps pushing the US into borrowing more and more and importing more and more because we want dollars and we want bonds and instruments to park our dollars into, right? So actually it's a burden on the US to have to keep importing to supply dollars to the world and have to keep borrowing to supply savings instruments and places to park our dollars. So it's time that other countries like China step up, right, to be alternative providers of liquidity to the world with all the burdens and responsibilities that come with that.
I think President Trump will be delighted that you feel his pain, that you feel so sorry for the US. Thank you very much, Thomas Lembong.
Thank you, Stephanie.